What's going on, everybody, and welcome back to InvestQ. And today we're going to be talking about BigBear.ai again. And it's just a quick little update because regarding BigBear.ai, as you know, they had their Q2 earnings report not too long ago. And ever since then, it does look like the stock price has been recovering. However, right now in the early morning session, there is a slight dip, less than 1%. But I believe the stock has climbed 8% over the past week, even though initially the price action was negative after they released their earnings, because according to the sentiment of a lot of people, even though it was a good quarterly report, it still wasn't, even though that they did good, they didn't absolutely ace it and excel in that quarterly report, if that makes sense. And that's when BigBear.ai, they did sell off just a little bit. And investors focused on some of the weaker parts of the quarter. And the particular things that people were focusing on was regarding the company's losses, their cash burn, and the continued questions surrounding profitability. But that's where things started to change slowly and gradually over the past week, because at the time of this recording, we're at $3.32, and it's been up roughly over 7% the past week. And we've actually seen BigBear.ai grind way higher than it is right now. So today I want to talk about why that might be happening and where investors are beginning to reconsider the earnings report and what I personally think we should be watching from here. So again, I don't think we should try to rewrite history or try to say that the quarterly report was something that it wasn't, because again, they didn't report a perfect quarter. There were legitimate reasons why investors initially reacted negatively, and BigBear.ai continued to report losses. And adjusted EBITDA remained negative, and cash flow was another area that investors had reason to watch closely. And those are especially important issues for a company like BigBear.ai, because ultimately revenue growth and new contracts need to translate into a financially stronger business. And we've talked about that on the channel before. And me personally, I can be optimistic about the long-term opportunities surrounding the company while still acknowledging that there are risks at play. Again, on this channel, on InvestQ, we always do our best to take all possibilities into consideration and look at the bull, the bear side, and the potential risks and opportunities within any company. So when the company did initially sell off, I didn't think the reaction was necessarily completely irrational, especially because it dropped and then it kind of stagnated a little bit. I did think that reaction was somewhat appropriate. But in my opinion, what things got interesting is the fact that once you get past that initial reaction and actually look deeper into the quarter. For those of you that haven't tuned in and seen my previous videos talking about the quarters, feel free to check out those previous videos below, along with the live stream where we covered the Q2 earnings report. But if you remember, there were also encouraging developments, because they generated approximately $36.7 million in Q2 revenue, which represented roughly 13% year-over-year growth. And the company also maintained its full year 2026 guidance of approximately $135 to $165 million. That is important because despite everything that went on, and investors and all of the things that investors didn't like about the quarter, management did not come out and materially reduce its expectations for the year. Excuse me. And BigBear.ai also discussed more than 20 contract wins during this quarterly period. And gross margins also improved significantly. They reached 32.8% this quarter. So as you can see here, everything that came out from the risks to the positives, to the positive and negatives in this quarterly report, it makes this quarterly report somewhat mixed. There were legitimate negatives, but there were also legitimate positives in this quarterly report. And I do think that this is where the recent price action gets interesting, because stocks, they don't always completely process an earnings report within the first hour or even the first trading session. Sometimes the initial reaction is dominated by the headline numbers, but then that's when the investors start digging deeper. And I'm wondering whether we're beginning to see some of that when it comes to BigBear.ai. And again, because I'm recording this at market open, by the time I post this video, it's possible that it may have dipped even further down, or it may have climbed even more. And I'm not saying that all of the positive developments in the quarterly report and investors digging deeper into the company is exactly the reason as to why it's climbing higher. because again, there are countless factors that can move a stock over a short period of time. But the market, it may be looking past the immediate losses and asking a different question. And that question could be, what could BigBear.ai look several quarters from now? And if revenue continues growing and these newer opportunities begin contributing, that's a much different question than simply asking whether Q2 was profitable or not. And one of the biggest things that I keep coming back to is guidance, because if management had reported these losses, and then if they significantly lowered its revenue expectations for the year of 2026, I think we'd be having a different conversation. And even though that alone wouldn't make me sell all my shares, because again, I am a shareholder of BigBear.ai, and disclaimer, this is not financial advice. Do your own due diligence. I'm just sharing my own research and my own opinions. But it would make me have more questions, because again, it's never a good thing to hear management dial it back and lower the expectations when it comes to anything, when it comes to forward guidance with revenue. And being the fact that that wasn't the case and that did not happen, they still reaffirmed their fiscal year 2026 guidance. That is a good thing, and it's something that everyone always loves to hear. And management maintained its full year revenue outlook, and that doesn't guarantee that they'll achieve it, and the company does still need to execute. But from an investor's perspective, maintaining guidance can provide some reassurance that management is currently seeing enough deterioration in the business to, they're not currently seeing enough deterioration in the business to abandon its previous expectations, and things are still going according to plan. Now, again, the pressure is going to shift towards the remaining quarters for the year, and the closer we get to the end of 2026, the more important execution becomes. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. And then you have the bigger story surrounding BigBear.ai, and it's that this company is operating directly in several areas receiving significant attention right now. And the areas that are receiving attention are artificial intelligence, defense, autonomous systems, national security, border security, and aviation. And we've talked extensively on this channel about opportunities like Conductor OS and the company's aviation security technology and its broader defense relationships. And we've also seen developments surrounding its airport security, their airport security technology, and other newer parts of the business. And none of these opportunities automatically guarantee meaningful revenue. That's extremely important to realize, but they do give investors something to look toward beyond one quarter's financial results. And if you're buying BigBear.ai today, and again, do what you want with your own capital, you make your own decisions. I'm not a financial advisor, but if you were buying BigBear.ai today, you're probably not buying it because you think the current financial statements are flawless. You're buying it because you believe some combination of these opportunities can eventually create a much larger business. And there's also another explanation that has nothing to do with the fundamentals, and that's momentum. Because BigBear.ai has historically been a volatile stock with a large retail following. And once selling pressure begins drying up and buyers stop stepping back in, price action itself can attract additional traders, and that can create a feedback loop. And the stock can start recovering, and then traders would start to notice, and then more buyers would enter. And short-term sentiment would also improve, and then suddenly a stock that looked terrible immediately following the earnings begins grinding higher, like we've been seeing over the past week. And that doesn't necessarily mean that the fundamentals changed overnight, because sometimes the price changes because expectations have also changed. And real quick, I do want to pump the brakes just a little bit. Let's slow it down, because BigBear.ai being up approximately 7% over the past week doesn't suddenly eliminate the concerns we discussed following earnings. And besides, that's not even like a huge price swing anyways. Because again, just remember, profitability still matters, cash flow still matters, dilution still matters, execution still matters, and most importantly, BigBear.ai needs to eventually demonstrate that all of these contracts, partnerships, acquisitions, and other opportunities can translate into sustainable financial improvement. And a good week of price action doesn't prove that. So I wouldn't look at this chart and suddenly say something along the lines of everything is fixed and BigBear.ai is going straight up. That's not how I'm looking at it at all. Instead, there are several things I'm going to continue watching. First would be revenue growth, and I want to see whether BigBear.ai can continue building on that approximately 13% year-over-year growth. Second would be guidance, and I want to see management remain on track with its 2026 expectations. And third would be profitability and cash flow. And at some point, growth needs to translate into better economics. And fourth is execution on these newer opportunities, because contracts and partnerships, while they sound great, eventually you still need to see that translate into the numbers, and that's ultimately what will determine whether the long-term BigBear.ai thesis is still intact. So overall, I think the price action from what we're seeing in BigBear.ai is interesting. So what is it that you think about BigBear.ai? Please let me know in the comment section below. And also, real quick, if you're interested in using the Prophecy AI platform, feel free to check out the second link in the description below. And recently, I've been hitting new milestones within my YouTube channel. Currently at 771 subscribers right now. And now that you do have the option, if you do enjoy my channel and enjoy my content, to become a member, and feel free to check out the monthly memberships from the tier 1 and tier 2 if you guys are interested. Again, no pressure, but just feel free to check that out if you guys are interested and wish to support my channel, as anything does help. So with that being said, guys, David over here at InvestQ, stay safe, and I'll see you on the next video.